folks. We got the S&Ps in the green, markets in the green right now. And as we do each and every Wednesday at 40 past the hour, we're going to talk to our man, Teddy Kekstadt. Folks, you can check out Teddy's outstanding Tiger Forex Report. He writes that every week, new issues Monday, updates throughout the week when warranted. It's only $97. It comes with a 30-day money-back guarantee. Check it out on the front page of TFNN right under that newsletters tab. Teddy Kekstadt, good morning.
Tommy.
So, where do we want to kick it off, Teddy? We got some yields were almost at 4% yesterday. The dollar's at 97. We got some action in the yen this morning as well. We got a question in the den saying, could you talk to us about the government bonds over in the yen? Maybe we could kick it off with the yen. What are you looking at this morning, Teddy?
Okay, well, since we're talking about the yen, might as well actually start with crude oil because that's going to be a little factor with that one. So we had a nice swing low yesterday on an outside day. It was an outside day lower close in crude, and we were laying right on our major directional pivot that we have in the Tiger Forex Report. I would say you key off the low from yesterday. Above there, I think you're going to be in a sideways chop up to about $63, up to about 65, $66. I really don't think you're going to take out the last swing, couple swing highs. Maybe you spike through them. If you do, I don't think it's going to last. Overall, I think that you really have to key off of where yesterday's low was, because if we get below that, $62, $61.75. Once you get in that area, we should start falling back into 55, area and stuff like that. So I think that we're probably range bound a little bit. You got to realize we're coming off a holiday market too. So, Europe was open on Sunday through Tuesday into Tuesday. Monday, even though the computers were open actually for crude and stuff like that, but still you had a very liquid market. So today I think is more of a reactionary day. We have some big numbers that are coming out tomorrow and Friday. Might be a little preemptive, some of the commodities get a little more action before the economic, because tomorrow is going to be, and Friday will be more economic driven markets, so you won't see as much action in crude. So I think you'll probably see a pullback in that. I wouldn't get over confident. If you're bullish, I'd be very, very careful with your expectations. I don't think you have a really good shot at a very good long trade versus catching a short trade over the next couple of sessions. And that's going to impact the yen. So let me pull up a yen chart real quick. And okay, so for the U.S. dollar yen, we've had quite the volatility in the U.S. dollar yen over the past week and a half, or excuse me, a month and a half. That's for sure. So if you look at how today, you can see that it's very reflective of what's going on with crude. Crude is trading higher. That's where you're getting catching a bit of a bid in the U.S. dollar yen. But if you look at where the currency is at, and I'm going to get to the bond question in just a minute, is that we're coming off of a higher swing low, but in a sideways trend to lower, really, if you look at the yen versus the crude. So I think that's also another part that's leading that area. That's why I say be very careful with crude spiking and then pulling back, because if that's range bound to begin with, it's going to be very hard for the U.S. dollar yen to, go back towards those major monthly highs that they've had over the past 2 months. So I think you really have to take that into account, that's probably going to be in a very big sell rally forecast. So in those regards, those fundamentals right there, I think those are where you really have to take a look at it. Now, when it comes to interest rates, let's look at ours first before we start talking about the Japanese. Yesterday we just came short of our major directional pivot for the 30-year interest rates. That's a big area for the bonds as far as, what has been priced in for what has been done since September, and as far as where we're looking at to not have anything done until probably June. At least that's what the consensus seems to be right now. And I think that you could probably take that one to the bank. If Powell was to pull the trigger on cutting rates before he leaves office, I think that would be, well, if anyone would be shocked, it certainly would be me besides the markets. And that's being factored in. So I don't think you're going to be able to see, at least on our end of the curve, see a very big pullback. I would say that you're probably bottomed out right now as far as rates are concerned. Maybe see a little bit of relief, a little bit of upward pressure on the 30-year and the 10-year. But I'd be very cautious with it. I think you're really set to be pretty much range bound from the levels that we're at. So we're kind of, you know what I'm saying, is we're hitting that extreme. There's no real reason to breach resistance and get a real big rally going, at least until we have a confirmation of the new Fed chairman and perhaps maybe the outlook that they would be taking, especially if it's a easing bias, if you will. Now you want to talk about when it comes to Japan and their bond situation. That's something that I would be very careful with, because the mechanics of what's going on there is, it's not just about whether they're, you know, how their financing is going. There's a little bit of a division with the Bank of Japan right now. We know, like, last year was the first time that they just even touched rates to begin with in decades. So I think that you have to be very careful with watching their bond market right now. I think it's more noise than anything else. And as far as its impact on the dollar-yen relationship, like, here's what I think you can see some action is: the yen versus other currencies than the dollar. Okay. When it comes to what's going on with their interest rate market, the polarity between the two of them, I don't think that it's going to have enough of a shift to really, on a trend basis, influence the U.S. dollar-yen relationship, if that makes sense. Now, if you're looking at the yen versus the euro, or the yen versus the Aussie, or something like that, which those are some big trades too, that's where you may see a disconnect with what's going on with the bond market with the Japanese, okay, and especially with the pound. The pound yen may be where you'll see now these crosses, they are heavily traded, but the spread is a little bit wider on those. So you have to be careful when you're trading those. Don't trade them on an intraday basis. That's something you have to be very careful of, okay? But I would say that if you're going to look to trade the interest rate play with Bank of Japan and what they're doing, as far as whether it's auctions or any type of quantitative maneuvers, if you will, which is probably, I think, which is going to be the biggest thing to look out for over the next 3 to 6 months with the Bank of Japan. But with the U.S. dollar-yen relationship, that fundamental, unless there's an extreme move, which that doesn't happen from the Bank of Japan or in the Japanese, I would say just discount that variable for right now and look at it more as a bunch of noise.
Awesome insight, man. In the poster, they had posted an article from the Times, and there's a lot. And the headline was how the world's most boring market became a battlefield, talking about those Japanese bonds just in terms of the volatility. So I appreciate you breaking it down. Hey,
sure.
How's the weather in Chicago this morning? Because I pull it up sometimes when I'm talking to you, because it blows my mind, and I see some big numbers. How's the weather in Chicago right now, man?
Right now it's amazing. It's 54 degrees right now.
I couldn't believe it. I double checked my internet when I was pulling it up. Yeah. It says 51 degrees and beautiful and sunny on February 18th in the Windy City.
It'll be
pretty awesome, man.
It'll be 27 high on Saturday. So
that's it, right? Hey, it's almost March and spring's around the corner. Teddy, yes, thanks for the great education as always. Folks, check out the Tiger Forex Report. Teddy, we'll talk to you next week, man. Thanks so much.
All right, take care.
Thanks. We'll be right back, folks.